I'm Oliver Slope with Blue Line Futures, coming to you from the Chicago Board of Trade with another episode of Tech Talk. Tuesday, February 15th. We've seen a lot of volatility and a lot of choppiness in a lot of these commodity markets coming on the back of the headlines that are coming and going with regards to escalating and de-escalating tensions between Russia and Ukraine. It's kind of like wax on, wax off, except for this is war on, war off, and that's created a lot of panic and a lot of choppy trading. I would anticipate that this all gets settled out here within the next week or so. But until then, expect the choppiness in the headlines to continue flowing in both directions. Now, before we get into the charts, I did want to bring to your attention right here, we've got the seasonal trends page pulled up on our site. And this is powered by MRCI, More Research Center Incorporated. And they have a great deal of information available. And that's why we've decided to partner with them as an extra tool in our toolbox and potentially a tool in your toolbox to give you some trade ideas here going forward. And I just wanted to kind of go over some of the outlook that they have going into February and kind of looking at a few of the seasonals in the month of January. So right here I've highlighted the yellow ones that are coming to an end, the seasonal trends or the seasonal trades that are coming to an end. And I've starred the agricultural ones with a green star. So here we've got a March soybean seasonal coming to an end on February 17th. That started on January 2nd. And that seasonal was, well, if you'd bought January 2nd, sold on February 17th, that's been profitable for 12 out of the last 15 years. Obviously, this year is going to pad the stats substantially. The average gain over the last 15 years has been just over 20 cents. This year, we're sitting at about $2. Also, coming to an end this week, June live cattle. That was a buy on January 29th and getting out on February 19th, profitable for 13 out of the last 15 years, with a profit about a point or $400 right now. As of today's close, that's up about 2 points. And we've got a couple here that started in February and are coming to a close in February as well. April feeder cattle being one. And we've got a March wheat seasonal that just started here this week that's selling on February 13th and exiting the position or exiting the trend on April 16th. And a lot of people look at these seasonals and they trade them step for step, and that's okay, and that's a good way to do it. But some of these go awry in the middle of the seasonal trend, and so it's good to manage your risk and have some sort of discipline during these seasonal trends. And you can use it just as an indicator. If you're looking to go short a market, but you're entering a bullish seasonal time of year, well, maybe you should lighten your size or maybe step to the sideline and wait for something a little bit more appealing to show up. So you don't have to trade in lockstep, but it's always good to trade with the trend. They always say the trend is your friend until the end when it bends. So this is something that we're going to start offering as we've partnered with MRCI. Again, you can go to bluelinefutures.com, go to research, click on seasonal trends. That'll bring up a page here where you can submit your information and get on a 14-day free trial. Now, without further ado, we'll get into the charts. And as we had mentioned, the bullish seasonal for soybeans is coming to an end. We've rolled over a little bit here over the last week or so, but the bull's still in clear control of the technical landscape, and that will continue to be the case until we break trendline support, and really that's sub $15 right now. But before that, there's a big support pocket here in the mid 1520s. That's going to be a must-hold line in the sand to prevent a retracement to trend line support, which would also be around the breakout points back here at the end of January, which were the previous highs back in June. So mid 1520s, big area this week. A break and close below there. You might start to see a little bit more profit taking from the buyers on this big whoosh higher. Now moving over to the June live cattle market. Again, this is one of the seasonals that we touched on. We've been trending higher. Up at the top end of the range, we've been talking about the cash market potentially stalling out, the seasonal coming to an end, and looking for a little bit of a retracement back to some of these breakout points, as well as this little bitty gap down here near 138. With cash where it's at, we don't mind looking at the April contract to be playing the short side. But all in all, the trend is still up. So if you're going to play the short side, you want to tread lightly. A break and close out above these previous contract highs, which were made just last week. You probably want to take your medicine and move to the sidelines and wait for the dust to settle before jumping back in. And wrapping things up, we've got wheat. Again, this is seasonal. This just started this week on the sell side, and as you can see, we've started to drift lower. We're marking lower highs and potentially lower lows. There's some trend line support that comes in down here near 740. That's going to be a big area. If you zoom out like we are here, you can see that we're in a wedge. Breakdown below 740, I think could potentially lead to some accelerated selling pressure, potentially getting us back towards that psychologically and technically significant $7 handle. So that's what we're looking at. That's what you should be looking at too. Again, check out bluelinefutures.com. Go to research, seasonal trends, get yourself signed up for a 2-week free trial. If you've got any questions, please give us an email or give us a call. It's been Oliver Slope with Blue Line Futures. Remember, trading futures and options involves substantial risk of loss and is not suitable for all investors. Thanks a lot.